This video is for entertainment and educational purposes only. There is always a risk when investing in the stock market. These videos are never a suggestion to buy or sell any specific stock. It is always advised to do your own research and to keep learning more and more about any strategies used in these videos. Guys, welcome back to the channel. I hope everybody had a good long weekend. This week in the stock market will be another short week, as yesterday was MLK Day, so we have 4 days. So we're going to update Melanie's balance. Okay, looking at Melanie's account, we're now sitting at $7,450.65. Okay, so looking at Melanie's balance, we did update it. We're now looking at $7,450.65. Today is the 19th of January. Looks like we kind of missed a weekend here, but I'm going to be more consistent now on, so it will be every time we do this video once a week, we'll update the balance. So we did update hers to $7,450.65. And just a quick look here. We're up over 10.85% within the last 3 weeks. We have a total now of $15,267.73. And we have 34,700 left and 69.46 to reach our goal of 50K. And looking back at Melanie's account, back at her positions, we can see that Ford, GoPro, Nano, and Nokia all hit the strike prices. We had a $4 strike for Nokia, a $10 for Nano, $8.50 for GoPro, and there was a $9 call for strike price for Ford. So all of those sold. Carnival Cruise Line did not hit our strike price, so we still have Carnival Cruise Line. So we will need to buy new stocks this week. And looking at our cash, we have $5,371.65 to spend. And we do have about 20 minutes before the pre-market opens, so let's jump over and update my Roth. And we will look at my Roth using the phone. I like to use the computer and the phone, that way people can see both ways. Depending on which device they use, they can see how we do this. So let's jump over to mine. Okay guys, we jumped over to my account. We're currently sitting at $8,163.45. So updating my total, we have $8,163.45 January 19th. And if we look at the overall total, $8,163.45. We need $34,385.90 to reach our goal of $50,000. Currently we're at 15,614.10. We need 68 more percent to reach our goal. So we will jump back to Melanie's account and see which stocks we will buy this week. Okay guys, after reviewing some stocks, I think today we're going to buy Blink Charging. It is currently sitting at $49.40 in the pre-market. So we'll buy 100. And we're going to do, let's go to extended hours. So we have Blink. We're going to buy 100 shares. And we could see right here in extended hours is currently at $49.40. It closed at $47.10. It jumped up a couple of dollars during the pre-market. So we're going to set a buy at, let's do $49.43. So we'll set it a few cents above. We'll review and submit this order. Okay, so our Blink did get executed. It actually got executed at $49.25 a share. So it dropped a little bit. We got it at $49.25. So we currently have $446.65 left. I don't think I'm going to buy anything right now. I might look back at Nokia if it drops again, but for now, we'll probably just keep the balance there. So we have Blink charging and we have Carnival Cruise Line. So we're going to look at Blink charging. Again, our cost basis $49.25 a share. We're going to come over to this little drop down menu and we're going to click on options chain. So we click down here and then we're going to click on options chain. Once the options chains open up, we're going to check our date. We're selling it 3 days out. Our cost basis was $49.25. So we're going to look at the options chain. We're going to go above our cost basis. And 49 is the one we can't do because we bought it at $49.25. So we're going to look at the $50 options chain. And we're going to select it by clicking trade. So we're doing the $50 options chain. This is above our cost basis. It's the first one above our cost basis. We're going to click right here on trade. The option chain opens up. We're going to read this. We're selling Blink. We're selling the 122 call. That's this Friday. Or we're selling the 122 expiration date. The $50 strike price. We are selling the call option. We're merchants. We're going to sell to open. We have a coupon now that we're ready to sell and we're open for business. So sell to open. And this will be a market order. And to make sure we did everything right, it should populate an estimated amount. And then we're just going to click the review order. Again, every time you get a chance, once we click the review order, you'll come to this screen. If you're new to this, then make yourself read this. We are selling Blink with an expiration date of the 22nd of January. We're selling the strike price of $50. We're selling the call option. We're selling this at market. And since this is pre-hours, this is for people who have to go to work and they want to set this up before they leave so they don't have to worry about it for the day. There are, for their liability purposes, is let us know that this is being placed in market hours. This can execute a lot lower because once the market opens, there can be a lot of pre-trading during the pre-hours. There can be a lot of trading and this can change substantially. So we just have to check these two for their liability and for us to understand that we know what we're doing. And once we have selected that, we'll just place our order. We are now going to move to our next one, which is Carnival Cruise Line. We're going to check the arrow. Then we're going to go to options chain. Remember, we need to know our cost basis. Make sure you check your cost basis. Ours is $21.86. So we're going to check, make sure it's this Friday. So 3 days out, because this was a short week because of MLK Day. So we only got 4 trading days. Our cost basis was $21.86. So we want to make sure we sell a call higher than our cost basis. Now, last week there was something weird happened with this. They ended up giving me $1. So I'm going to actually set a limit this time. So this will be our first time getting to see a limit. We're not going to do a market order. So we're going to go to our cost basis. We're going to click trade. Again, we're looking at the one that's higher than our cost basis. And again, like last week, I don't know why it gave me $1, but it should be $19. So let's click on the trade button. Okay guys, so we're going to check, let's always check this. We're selling Carnival Cruise Line, expiration date the 22nd, a $22 strike price. We're selling the call option. We're selling to open because we're merchants. But this time, instead of a market order, we're going to do a limit order. So we could see $19 is what they're currently setting at. So let's do a limit order. We're going to do a price of 0.15. So if it is 19, it will give us the 19. We'll set this for day only. So understand that 0.15 is times 100, so we'll get 15. We're setting the limit at 15. If we look here at the bid price, it's at 0.19. That's why I was saying 19 earlier. Usually the bid price is what it's based off of. You know, this is the asking price. They want up to $21. In the middle is kind of 20, and 19 is the bid. So we'll just review and submit this order. Okay guys, so we've spent all our money within about $450. We'll come back after market opens to check these. Okay guys, the stock market is open now, and we can see that Blink and Carnival Cruise Line, we did sell our options. I'm going to go to history here. So looking at history here, we sold the $22 call for Carnival Cruise Line, and we sold the $50 call for Blink. Both of them expiring on the 22nd. We did sell one contract of each of them. We got $20 for the Carnival Cruise Line, $2.64 for Blink. And after the 65 cents, for some reason this is 66 cents. I don't know where this weird stuff comes out, but we got $19.35 for Carnival Cruise Line, $263.34 for Blink. So let's update our sheet. Okay, so we have updated our sheet. We have both of these sold today, Carnival and Blink. Expiration dates 22nd, $22 and $50 strike prices, one of each. We received $20 and $264. And then after the fees of 65 and 66 cents, we have $19.35 and $263.34. So not a bad week again. 63, 783, so about $283 for the week. Not too bad. Okay, let's take a look at mine. Okay guys, looking at my account, we can see we still have Lyft and we have Zenga. I know the Zenga cost basis was under $10. So I jumped to the history, and I can see I bought Lyft at $4,949. So our cost basis is $49.49. So we'll start with Lyft. I'm going to click right here. I'm in my positions. I'm going to click right here on Lyft. Lyft opens up, and I'm going to click right here on options. And we're going to look at this. We're selling Lyft. Expiration date was within 3 days, and we know our cost basis is right under $49.50. So we'll look at the $49.50 call. We go down. Whoops. We'll go down to the $49.50 call. This is the one we want, and we're going to check. We're going to click right here on the 66. Then it pops up to this window, and this is a good opportunity for us to learn. We're selling Lyft, expiration the 22nd. We're selling the $49.50 strike. We're selling the call option. We're going to click trade. Okay, we'll review our order. We are selling Lyft, expiration in a couple days here. $49.50 strike price. We're selling the call option. We're going to sell to open, and we're doing a market order. So we'll place this order. Our next stock is Zenga. We're going to click right here on Zenga. The screen will open up again. We're just going to click on options. We know our cost basis is below $10. The option chain comes up. We're just going to check the date to make sure that we're 3 days out. And we know our cost basis. We're just going to use the same call we've been doing, which is the $10 call. And we're going to click right here on the 12. We're going to review our order. Again, practice this, guys, until you got it down. We're selling Zenga with an expiration date of the 22nd. We're selling a strike price of $10. We also on the call option. We're going to sell to open, and we're going to do a market order. So we'll submit this order. Okay, guys, so we're sitting at about 2,400 in cash. So let's buy another stock. So Nano Dimensions, I know we sold the $10 call. It has already jumped up to 11 something. I believe that this stock is going to continue to go up. So I think I'm just going to rebuy it. So we're going to have to pay a lot more than we did last time. I think we got it at $8 when we originally bought it. So I'm just going to click back on Nano. And we can see that, if we look at the bid right now, Nano is sitting at 11.20. So we're not going to click on options this time because we're actually trying to buy the stock. So we're just going to click on trade. So looking at this, we put in our ticker, Nano. We could see right here we have $2,408 to spend. So we're going to buy. I'm going to go ahead and do 200 shares of this. I'm going to set a limit price of $11.25. And if we come back to our positions, we can see that we did get filled. Nano Dimensions, we have 200 shares. So I'm going to click right here so we can set up the option. This time we will click on options since we now own it. So we look at this, we're going to see Nano don't have weekly options. So this one's actually going to be 31 days. So basically it's a month. And we know we just got it at 11 something. So we're going to sell the 12.50 call. It might even go past. You know what I'm going to do? I'm going to sell one call for $12.50 and one call for $15 because I think this stock is going to go up. So let's click on the $1.34 first. And looking at this, we have Nano expiration February 19th, 12.50 strike. We're selling the call. We're going to sell to open. We're going to do a market order, and we're only doing one because we want to sell two separate calls. Okay, so we submitted that one. We came back to the options chain. This time we're going to click the 85 to sell the $15 call. So we can see it's the same expiration date, except this time the strike price is $15. Selling the call, sell the open, market order. So guys, you can see, you know, we bought this stock. I don't know what it was, but let's just say it was $11.50, right? If we bought the stock at $11.50 and we received over $100 for that first call, but that strike price was $12. So if this stock goes all the way up, even if the stock goes to $15, we're going to receive $50, right? A total of $50 in capital gain. But this one, we're getting a little bit less up front. You know, we're getting probably about $20 or $30 less. But if the Nano goes up to $15, you know, and we bought it at $11.50, right? We'll gain almost $400 off of capital gain. So 50 versus 400. But you got to look at upfront money versus money in the later. And that's what it's kind of all about. So this was a perfect opportunity to show you how you can sell the same security with the same expiration date, but we got two different strike prices. So we're going to submit this order. Okay, guys, we submitted all of our orders. We successfully did lift both of our Nanos and Zenga. We'll come back after market opens to make sure these got executed. Now open, so we're going to take a look at the calls. And we can see that we sold the lift, both of the Nanos and the Zenga. So let's take a look at history. Okay guys, so looking at history, we got Zenga. We got a total of $12.35, the $10 strike price. And the call option expiring the 21st. Lift also expires the 21st, $49.50 Strike price, call option, $80.35 total. Nano, we sold the 19th of February expiration date at a $15 strike. The call option, $103.35. And we sold a second Nano with a $12.50 strike call option, and we received $149.35. So let's update our sheets. Okay, I have updated the sheet. We can see all of these were sold today. We have Zenga, Lift, and the 2 Nanos. Both of those expiring on the 22nd, and the Nano is expiring on the 19th. We sold the $10, the $49.50, $15, and the $12.50 strike, one of each. We received $13, $81, $104, and $150. After our fees, we got $12.35, $80, $103, and $149.35. So what's that? $149, $249, $249 plus 80 and 12 is about 92, and $394. So not a bad week again, right around $350. So not bad at all. Our prices or our totals are still updated from this morning. We'll update with the new totals next week when we do week 5. But we're getting there, guys. I'm hoping that you're starting to see the value in this strategy that I'm using. And remember, guys, anybody can open a Roth. Make sure you understand the requirements of it. What I'm doing in the Roth could also be done in a broker account. Exact same thing. There's no difference except for the account name. And in a broker account, you can actually take out that weekly gain and use it to pay bills or eliminate debt or reinvest, whatever you need to do. So guys, I hope you found value in this. If you have any questions, leave a comment below this video and I'll get to those as soon as I can. Thank you for watching, and I'll see you guys next week.